So we've seen a strong pre-budget rally and a post-budget sparkle. This rarely happens, and this has happened, I guess, after a gap of nearly, 6 or 7 years. So you don't see such kind of a big move in the market. Ramdev Agrawal now joins us, and Ramdev, I'm sure by now you've digested some more fine print. Can you identify two or three named sectors or theme for us which would be big beneficiaries of this budget in terms of earnings? Your smile is telling me the inside story, Ramdev. I mean, when I came to you first, you had a medium smile. Now the smile has become big, which means you're very happy with the budget.
Yeah, I'm very happy because there is no disturbance in the budget. And what is a disappointment that PSU banks has not been recapitalized in aggressive way or reformed. That becomes a good news for all the private sector banks and NBFCs and housing finance companies. And with the whatever benefits they have given to the housing finance and the kind of pressure they have, I think the center theme would be all the private sector banking kind of things, say insurance, your NBFCs, housing finance companies, well-run banks, newly listed banks, the banks which are coming. I think this segment is going to do extremely well, at least in the near future. And near future, it doesn't mean tomorrow or day after, but this segment is clearly going to be one of the big winners.
Jim O'Neill, of course, is with us as well. Jim, thank you so much for joining us. I know it's early in the morning for you, and I'm sure you've heard a cross-section of opinion from market participants to CEOs to economists to budget architects. I want your final take. Do you think this is a budget that's going to help re-rate India? You know, in the build-up to this budget, we call Tryst with Destiny because we believe this was an opportunity for the government to re-rate India. Do you believe this budget does that? Does this re-rate India?
Well, listening to what you just said about the market reaction and it being 6 or 7 years since it was so strong against a volatile global background, that obviously suggests the markets are seeing something that is consolidating India's growth leadership in the world. We have now over 12 months where, at least on official data, Indian GDP growth is stronger than China's. And I think often governments are best if budgets if they don't do anything to disturb the outlook. And I think that's what's really happened here. As I said at the start, I don't see anything spectacular, but I don't see anything wrong either. And it's generally fiscally conservative. What I think I'd be really interested in now is how India thinks in terms of moving forward on trade, particularly in terms of its relationship with the rest of Asia. My own personal judgment is Washington is making a major mistake in its stance on trade and giving China an opportunity to take greater leadership on trade deals, including in Asia. And it's going to be very interesting to see how India positions itself. Obviously, traditionally, it's aligned itself more closer with the West than with China. But I think, given the importance of China in trade and the rest of Asia for India, I'd like to see India doing things more in terms of opening up its trade relationships with its other Asian neighbors, which I think will help India sustain 7, so maybe even 8% growth for many years into the future.
Jim, really appreciate your time. I know this is early morning for you. Glad you could join us, and thank you for immediately giving us your ratings and asking that rather tough question to the DA secretary. Okay, now markets, we've got a nice little party. Gentlemen, should I remind you guys that there is a problem in the world, and that's Donald Trump? Markets are not recognizing that IT and pharma will have no earnings. What is the celebration all about? Is this a short covering?
Yeah, I don't think we should read that as IT and pharma will have no earnings. I think the growth rates might be muted, but they have been muted. There have been other things like FDA for pharma and the consolidation that is going on. So, and I think that the markets have accepted. But if you see this, I think there have been a lot of good things also from a relief point of view. You know, excise on cigarettes and all has not been increased. No tinkering of excise rates or sales tax rates, which is good for a lot of the manufacturing FMCG companies, very good for housing, very good for real estate companies, no capital gains. So I think the rally that you are seeing is largely out of that. A lot of positive, and absence of the negatives that the market was afraid will come in the budget.
Because I think it's important to clarify, excise duty on cigarettes across all lengths has been hiked by 6%. So they have touched cigarettes.
has been hiked?
It's in the fine print, yes, they have.
Let's look at ITC as a stock. We've always seen this ITC tends to become this favorite betting place for budget day. Depending on the announcement, goes higher, comes lower. And again, I think the fine print is out and you can see that movement in ITC. Ramdev, you've never bought real estate stocks in the past, but post this budget, now that the sector is opening up, things are jammy, the jam is opening up now. Is it time to revisit some of the good quality real estate companies, because that's where all the focus and the thrust of this budget is?
If we come across something which is pristine and books are very reliable and clearly, because this is one of the largest business in the world and India has a potential to produce one or two real large real estate giants. But regulatory requirements, the practices, land acquisition, cash components, I would still stay away.
Okay, 110 points up for the Nifty, 3.5% up for the real estate index, and you got a 400-point rally on the Nifty. And again we go back to the same point, Nilesh Shah. Was the market short in the run-up to the budget, and is this just short covering?
Well, it looks like that way. The initial reaction definitely seems to be like that. The fact that clearly the tax structure for capital gains has not been altered at all, be it short term, be it long term, or tweaking the time horizon. I think that itself is a huge relief for the market.
So are we on course to make a new high? We are 400 points away from a new high. A month ago, a new high in the month of December looked like a tall order, a very high watermark. We are 350 points away from an all-time high?
Perhaps. I think that if you exclude the IT and the pharma sectors, maybe the rest of the market is pretty close to the all-time high or as much as the all-time high. And I think this budget is very significant in that context, that it recognizes, it is cognizant that there are going to be headwinds in terms of exports, international business, sectors like IT and pharma will face headwinds. Therefore, this budget does a lot to push up A, government expenditure, and B, leave some more money in the hands of the individual households to push up domestic consumption. And I think that's really the big takeaway of this budget.
Frankly, what amazes me is the strength of the market. It's not a 50-point jump on the Nifty. It is not a 20. It's not a dinky jump on the Nifty. It's a triple-digit jump on the Nifty. And in the month of December, when the demonetization news was announced, who would have thought that we would be November when the demonetization news was announced? Who thought that we would be going close to a new all-time high? We are now less than 3% away from an all-time high on the Nifty.
It's quite incredible, isn't it? Ramdev, surprised by the swiftness of the rally that we've seen in the market today. I understand it's a pro-growth budget. I understand there aren't too many negatives in this budget. But I'm surprised at the swiftness of the market rally.
Yeah, market always surprises. We have seen pre-budget, post-budget, next day to the budget. I think 1 or 2 years back, markets gave thumbs down to the budget on the budget day, and next day it opened with 1,000 points up. So these things happen around the budget time. So I'm not surprised by that, and that's the fun of these big events, because how much fear was built into the market price that nobody is aware. And the moment budget is over, all the guys, even the India funds, all the foreign portfolios, they were under the entire threat of this taxation. That has been very clearly clarified, and that could also unleash some amount of buying from the foreigners. So only in the evening you will come to know who is pushing the market by buying it left, right and center. Domestic flow has been very strong, and now if FI flow also remains strong, who is going to sell? So that kind of position can happen.
Right. Just hold your thoughts there, because I think the one part of the discussion that we haven't still touched upon, Mukesh, is FIIs and FPIs who've got a lot of relief this budget. He's not just clarified on triple taxation, he's also said there'll be fewer FIIs in indirect tax rates. So assuaging and telling foreign investors that the world landscape may be changing and interest rates may be going up in the US, but India is open to business and we're going to make things easy for you.
Yeah, I think he's availed of this opportunity of clarifying the FII taxation issue. A step was already taken a fortnight back by withdrawing the administrative circular, but that is not sufficient. So I think by making a statement, he has clearly carved out an exception for levy of indirect tax on FIIs, which was becoming a big issue as such. We still need to see the fine print, but I would reckon that he would have moved an amendment in the income tax law possibly by way of an explanation, clarifying that the indirect transfers will not apply to FII. So I think it's an extremely positive move, particularly given the environment that the FII find themselves in, where because of international developments, a lot of money was flowing back into the US. Now, this will now lend a degree of certainty to FII investors insofar as the rate of return is concerned on investments in India.
And that kind of certainty is always warranted in the
There are
markets,
two
Nikunj.
rate sensitives. Supriya, you look at banks and real estate. These are two groups which are moving up. One, there is hope. Second, there is indication that if the economy picks up, maybe some of the jammed money, starts coming out. And Nilesh, what was your first instruction to your deputy after you saw the budget? क्या लेने का?
Now they're going to discuss which of the Nilesh are you talking to.
In my case, it is ulta. My deputies tell me what I should be doing.
Okay, so what's the house view now?
The house view is that one, the fiscal discipline is fantastic. Last year also, 3.5% made the bottom of the market. This time it is not 3.2, but it's still good enough to hold the market at current level. Second thing, one good feature here in this budget is to assure FIIs. So your indirect transfer has been put to rest. The withholding tax has been extended to 2020. That's again positive. Third, the rule of law is being enforced in the budget. We have seen so many things on 138.1 negotiated instruments act, check bounces doesn't matter. But now if they are trying to fix that, it will be fantastic.
Anything in the fine print which has not caught market's attention, which you would like to bring out?
One, 10,000 crore recap for PSU Bank, is it good enough? My guess is that it is not. It should be probably 25,000 crore plus.
Then why are PSU banks up?
There is so many good things for the banking system per se. One, you are banning that illegal deposits, which means more money can come to banking system. Second, affordable housings will get a boost, which means housing loan can pick up. Third, SME tax rates have come down, which means pain of SMEs via demonetization into NPA will not be felt by the PSU bank. So there is fair amount of positivity on the banking sector side, which is probably ensuring that this lack of capital availability might be ignored.
Ramdev, we are talking about demand coming back, consumption moving up, resurgence in corporate profitability. Push will come from the Aam Aadmi and from the SME sector and the medium, enterprises, so to speak. Does this augur well for corporate banks, not retail banks, but corporate banks, and also for down the pyramid category, names like Bharat Financials or for that matter Equitas? Are these two categories going to gain immensely?
I think as far as the banking side is concerned, any bank, whatever might be the segment in which they are operating, if they are underwriting well, of course, there is a fear, there was problem in the corporate loan book, but even there, if your quality of underwriting is good, I think you are going to do very well, because the competition, 2/3 of the banking system, that is the PSU banks, that competition will remain muted for a long time to come, because government has taken no action to revolutize and compete, to be capable to compete in most of the arena. So I am very clear that private sector banks, whether private sector banking kind of a services, whether it is a housing company, whether it is NBFC, whether it is a loan company, even a corporate loan, because you have seen worst of the corporate bad loans. Now from here onwards, even they are going to do well. So, but I think 2 points were missed out, which were very big. One was the abolition of FIPB, very big initiative to remove the bureaucratic delays in the foreign investment into India. And second thing was the political funding, which is always a holy cow and nobody used to touch it. They have taken it straight, and they are saying that anything above 2,000 rupees has to be through the digital payments. So I think these two are very large, positive initiatives by this government or the budget.
Well, thank you so much for joining in with that perspective on Budget Day live on ET Now. Prashan Jain is going to be joining us in just minutes from now, but we've got two really special ministers also miking up on ET Now. It doesn't get bigger than this. We got two architects of the budget from North Block, Shaktikanta Das and Arvind Subramaniam, and now we're going to be joined by Nitin Gadkari and Piyush Goyal, both of them live and exclusive, taking questions from our stellar market panel right here on ET Now. But before I go to Mr. Goyal, he's just getting mic'd up. Maitri, I want to toss it to you on the budget arithmetic. Mr. Das made this point about how nominal GDP growth has been assumed at 11.7%. Is that being very ambitious? Are you concerned about how the budget arithmetic adds up?
Well, absolutely. I think the budget arithmetic is one area where it's entirely grey for the simple reason that we still don't have any numbers from the government of how much the money has been returned to the banking system. Is there any windfall gain? There's complete silence on that. So the entire amount, in fact, growth last year, as per the CSO's latest revised estimate, is 7.9. So this fiscal, the growth might be well below 7%. It may be closer to 6.5%. So in which case, what is the base we're building on? What is the kind of tax revenue we're talking about? So the entire budget arithmetic, it's always a little suspect, but in this particular case, it seems very suspect. And that is why I think as far as the economics of the budget is concerned, if you were to ask me how do I rate the budget, I would think on the politics of the budget, I would give it an 8 on 10. On the economics of the budget, precisely because the assumptions are so grey, I would give it only a 5 on 10.
All right. We've got a very, very special guest, somebody who is extremely involved, deeply entrenched in policy making as far as New Delhi is concerned. It's my pleasure to welcome Mr. Piyush Goyal right here on ET Now. Thank you very, very much for being with us. Congratulations coming your way from market participants and Indian markets as well. Up very, very sharply for the Sensex, now up 410 points. The Nifty making very great moves as well, Mr. Goyal. So congratulations on that note. But it's my duty to be a skeptic because I'm a journalist, and so I'm going to ask you the budget mathematics, the growth numbers, and they don't seem to convince our panel here. 11.75% nominal GDP growth is what you're looking at for next fiscal. Isn't that too high, too ambitious a number?
First of all, Supriya, I think the entire compliments and congratulations should go to Honorable Prime Minister and Honorable Finance Minister, who have really brought out a budget that satisfies that anxiety and the excitement that this budget had generated. Huge benefits of demonetization passed on to the people of India. Almost every taxpayer encouraged to be more honest in his tax paying and declaration of income. The small and medium industry getting an unprecedented boost, job creation becoming a focus with affordable housing taking center stage. I think truly
Piyush, we can hear you.
Something the Honorable Prime Minister and Finance Minister have given. Can you hear me now?
We can. Carry on.
Supriya, so truly I think the Honorable Prime Minister and Finance Minister deserve accolades for having brought out a budget without any taxation, new taxation, being able to satisfy large numbers of people in the country, particularly from the agricultural sector, the people, the poorer people, the marginalized sections. As regards the budget numbers, I don't see anything that you should be concerned about. In fact, Finance Minister Mr. Jaitley must be the first FM who for both the last two budgets has spent more than he budgeted while keeping fiscal consolidation intact. So if you see the revised estimates of the last budget and this budget, in both budgets, the spending on capex, the spending on different social security schemes have all been on the higher side compared to the budget, thanks to buoyancy on tax revenues, thanks to the fact that we have encouraged people to be more honest in their compliance of tax laws. And I see no reason to be skeptical about next year. I can reassure the people of India through you, next year we will spend more than budgeted and the country is in very, very safe hands.
Mr. Goyal, we want to talk about some of the specific budget proposals. The one that the market seems to have liked a lot is a proposal to create an oil behemoth. You understand the energy sector very well. What's the rationale here and how is it going to play out? Is it a simple merger of some of the big oil listed companies to create an oil behemoth? What's the rationale and how is it going to play out? By when will we get more clarity on this potentially game-changing move?
Well, I would not know the full details of this particular announcement. We will have to wait till the details are given out by the Honorable Finance Minister. But I think the recognition that duplication of work could be avoided and we can use the sheer strength of large numbers in our favor is something that the Honorable Finance Minister has taken into consideration. The fact that we are a large energy consuming nation and the fact that with economies of scale, country can gain a lot of benefit will what this oil behemoth be all about.
Right. Mr. Goyal, I also have a question on corporate tax. Your government had promised to bring down corporate tax to 25%. I know you've done that for nearly 96% of the corporate entities that filed returns, and the big business is really left out of this. The question that some of our panel did ask early before you joined in was, you've got 2 years more in office in this stint. Are we going to see a movement down to 25% even for the larger entities?
Well, that particular point, I think only the Honorable Prime Minister can answer. But you must recognize the sincerity of this government towards the small and medium sector, particularly the corporate sector paying with a turnover of up to 50 crores, being brought at par in some sense with the benefits that the larger corporates enjoy. As the Honorable Finance Minister said, the effective rate of taxation of the larger corporates was about 25%. Now with this move, the 30% that the smaller companies were paying because they were not in a position to enjoy all these various exemptions on growth, on new investment, I think they will also come down to 25%. It will be a big boost to partnership companies, proprietorships to move towards the corporate sector. And with that, there will be more accountability and transparency in their operations, in their account. People can be held responsible for their actions. I think the entire thrust of the various proposals tends to go towards encouraging people to move into the formal economy, be more honest in their payment of taxes, and with higher revenues, that's the Laffey curve that we are all aware about, will help the tax rates also continue to remain low.
Mr. Goyal, stay with us just 1 second, Maithili. I want to introduce Prashan Jain, CIO of HDFC Mutual Fund, one of India's biggest fund managers. Prashant, great to have you on ET now. I'm sure Mr. Goyal would also like to hear your verdict. The market has given a thumbs up to this budget, but very quickly, how do you view the budget in terms of the pro-market measures? And if you have a question for Mr. Piyush Goyal, please go ahead and ask that.
No, I think it's a genuinely good budget, and I think this government has maintained a very consistent approach across budgets, and it's heartening to see that consistency of reducing fiscal deficits, of improving ease of doing business, of targeting lower interest rates, lower inflation, and so I think in improving expenditure on capex, infrastructure, etc. So I think it's genuinely a good budget, in my opinion.
Worrying signs, particularly for overseas investors, is that the state finances and the consolidated fiscal deficit of the centre and the states is very high. And one of the main reasons why states have performed worse is because of the Uday scheme. Now, have we solved a short-term problem by getting into a larger mess? And has the worsening of the state finances been because of Uday? Because SEBs are in no better position today.
I think you have not yet understood the Uday scheme. I would urge you to read, or I'll be happy to educate you a little more about the Uday scheme. Uday has only reflected the de facto position into the de jure position. The fact that all this liability was existing on the states and their state utilities is a matter of fact. Now, the states were required to pay for the interest and the huge interest burden through budgetary support. Instead of that, by recognizing that as a state liability, we have been actually able to bring down their state support to these electricity boards, while at the same time enjoying interest rates in some cases as much as 5% less than what was being paid by the utilities. And in any case, the loss-making discoms are only 4 or 5, of which Tamil Nadu has only joined recently. So Rajasthan, Haryana and Uttar Pradesh were the 3 state discoms which took on the debt of the state utilities on their books. But on the other hand, they got the advantage, along with the advantages of lower interest rate, they got the advantage of reducing their state subsidies to run the discoms. So all in all, net, every state has benefited. And I'm happy to share with you, Haryana has been the first discom, the South Haryana discom, to turn into a profit from a loss. Rajasthan, which had the country's highest loss, 15,000 crore rupee annual loss, within 2 years of Uday, is almost in a situation of 1,000, 1,500 loss left, and by next year should be into profits. I don't think there has been any other game-changing improvement in any sector which has given such fast results with zero cost to the exchequer.
Mr. Goyal, I have a final question for you, and many in our panel did believe this could be game-changing, but I just want to understand from you, the FIPB will be abolished next fiscal. Many people believe that was a gatekeeper of sorts. What really happens with FIPB being abolished? Does everything come through the automatic route, or will we see something new come up on the contours of an FIPB, perhaps a simpler regime?
Well, Supriya, first of all, in my view, the biggest game-changing reform was more about the change in political funding. It's something this nation has debated for years, and I think the very fact that the Honorable Prime Minister and the Honorable Finance Minister have decided to make a path-breaking change to encourage people to donate to the political process more liberally will help cleanse the political funding process. I must compliment the Prime Minister and the Finance Minister for that big announcement on helping electoral politics become clean. The FIPB abolishing will be accompanied with further liberalizing so that more and more investments can come in the automatic route. Despite that, there may be some requirements where there will be need for approval by the government. But then instead of two bodies approving it, now all of that will be centralized at one level of approval.
All right, on that note, Mr. Piyush Goyal, can't thank you enough for taking time out this budget afternoon and speaking to us as markets trade live, and they continue to give you a big thumbs up to your Prime Minister, to the Finance Minister and to your government for giving out a budget that makes markets very happy. Nikunj.
Well, we have a very powerful panel indeed. The three wise men of Indian financial markets. Prashan Jain, S Naren, and Nilesh Shah of Kotak. And I've been told that between these three fine gentlemen, approximately 30% of the total AUM in India is managed. So it does not get bigger than this in terms of a mutual fund view and what India Inc. is doing. Now, who is bearish after the budget? Nilesh, Prashant, Naren, anyone?
No. Yeah. No, not bearish.
Not bearish at all.
Bullish.
Okay. Prashant, for the longest time, you've been an advocatory of avoiding global sectors like IT and pharma and buying banks and energy stocks. Post this budget, has your view only got endorsed more?
See, there is nothing in this budget which directly or meaningfully impacts these sectors, but I think fundamentally these sectors are undervalued, and India is on the cusp of a earnings recovery. I think the slightly lower fiscal deficit is very comforting, that lower interest rates are here to stay. And I think in the next 2-3 quarters, the significant resolution of NPA should take place, and the provisioning cost should drop sharply next year and the year after. And I think that is what the market is also suggesting now.
Are you somewhere not tempted to relook at your basic, India exposure, let's say PSU banks, energy stocks? Is there temptation to do that post the budget, because that's the thrust of the government? Naren?
Clearly, I think the way I see it is a big boost for financial savings. So the fact is that there is something called PE, and my view is that this budget increases the price to earnings target for the market, and PE can now go higher than what people believe, because at this point of time, what has happened over the last 3 years has been that financial savings has been given a good thrust. So slowly interest rates have come down. Price to earnings of a number of stocks have got expanded, and I think clearly that trend of increasing price to earnings will continue. There are challenges in different sectors as far as earnings is concerned, but I think the outlook for financial savings is so high that I think markets will get re-rated from here also.
Gentlemen, I'm going to request all three of you to stay with me for 2 minutes. The finance minister is speaking. Now 1 minute 59 seconds. I'll come back to you.
On spending in these areas. Railways today, out of 1,31,000 crores, I am supporting it 55,000 crores. Now that puts a question mark on the railways itself, but that was a necessity because the railways is an essential part of our life. Highways, ports, telecom connectivity, smart cities, rural roads. Now these are all success stories which are emerging, and therefore I had to build on those success stories. The second thing that weighed on my mind was that what does the economy and the country need today? I therefore, for the first time in the budget, a finance minister has given an honest data that we are a non-tax paying nation. Very few people do it. And therefore the burden of taxation comes on the compliant and the taxpayer because he has to pay his share and the evader's share. So I go hard on the evader and I must give some relief to this man. At the same time, I have multiple purposes in giving relief to the small taxpayer. There will be more money in his hand. There is an inflation index which has added up to his cost. And then I want to make paying tax for the evader an attractive proposition. That by paying 5%, claiming all these deductions, you can enter the tax net, half a page return, no scrutiny. So I want to expand this base. So I had multiple purposes in doing that. Post demonetization, I wanted to help the MSME sector. So I had a promise to keep. So I extend that concession unconditionally without exemptions being waived off to 96% of India's companies. I tell the sole proprietorship and the partnership, switch over to company, you'll pay less tax.
Okay, now, Prashant, this question is coming your way. Now, there is a big corporate benefit or corporate tax cut which has come for companies which are small, which have a turnover of less than 100 crore. But for the nifty companies and the listed companies, the tax cuts have not kicked in. So from an aggregate earning perspective, is that slightly disappointing?
I don't think so. We were not expecting a big corporate tax cut yet. See, first the tax base has to widen, and that will take time. And you are entering a year where GST will be rolled out. So I am sure there are uncertainties associated with this massive change. So I think once the fiscal situation is a little more comfortable, the tax base has widened, GST has stabilized, I think post that one can look at some meaningful tax cuts on corporate tax rate in India.
I remember we had a conversation, I think in the month of December, and you said, look, I'll wait for the budget, I'll wait for the Donald Trump regime, and then I'll make my market view. Both those scenarios are clear now. We know the direction of the minister, we know the direction of the budget, and we know what would be the Trump presidency will be all about. So now, how do you judge the market earnings and how do you judge the market direction? Naren, that question was for you.
You mean me, Nikunj? Yeah. See, I think clearly the outlook is, but while the markets are higher, the outlook is certainly much higher, better. The reason being that, basically if you look at the entire equity market, it is a function of whether the government supports financial savings or physical savings. In our opinion, clearly the dice over the last 3 to 4 years has been in favor of financial savings. With every passing year, the returns that people get in financial savings has been so much better than that of physical savings that I am of the opinion that there is a huge scope for markets to continue to re-rate, because if you look at it, interest rates have come down significantly. Many of the sectors have seen earnings decline due to a variety of reasons. There is a clear operating cycle which was to play for the next 2 years. The risk that we had was primarily from the fact that whether there would be substantial taxation on financial savings, making people go back to physical savings. And I think that risk is away right now, and therefore the outlook for equity markets is much better than what it was in end December. As far as Donald Trump policies are concerned, I think we are in a phase where I don't think I have any clarity. At this point of time, the reason why, for example, tech is doing badly is only because of that reason. And at this point of time, if I had to choose one sector which is contrarian, it would be technology at this point of time. And that is why I would say we would believe that markets should deliver decent returns from here. And we hope we have a good monsoon and we don't have a botched up GST. Because that is a slight risk which exists. I think the government has done very good work on it. So I don't expect anything to do with that. But if there is some problem at that point of time, that is the only risk I can see. I think the level of preparation, if the government continues to work on it, and it appears that the whole finance ministry is behind GST, I think then we should have a very good 2 years ahead of us.
Okay. Just a final question to Nilesh Shah as well. And Nilesh, while we've given enough ratings and more on this budget, is this exuberance more a case of we not seeing any kind of big negatives as opposed to there being big positives in the budget?
Probably there were many people who were expecting changes in capital gains and they were waiting on the sideline. Now in this budget, there's nothing on the capital gains side, which is probably pushing those people to enter into the market. And as Naren mentioned, the interest rates have come down dramatically. Today, your one-year bank fixed deposit gives return between 6 to 7. On a post-tax basis, that will be between 3.5 to 4.5. Now, on a daily basis, you see stocks going up 3.5 to 4%. So, your 1 day's good stock call will be equivalent to 1 year's post-tax fixed deposit return. So, this increased financial savings is getting transferred into the stock market. And that's going to create a base or a bottom for the stock market.
Well, certainly hope that remains the case. For now, the markets are exuberant with what's happened. So 3 ace money men who've spoken to us and given us their thoughts. Nilesh Shah, Prashan Jain, S Naren, gentlemen, thank you so much for your patience and your thoughts on the channel today. Really, really appreciate this. We need to slip into a very, very quick break on that note. We come back, Tanveer joins me as well, and we touch base with a host of other experts too on this show, the tryst with destiny, so to say. Stay tuned to ET Now for more news and updates.
Welcome back. You're still watching our continuing coverage of Budget Day, and what a rally on the markets. I mean, we're getting into the last hour of the session. We're about 1.5% higher for the Nifty. We're about 1% higher for the broader markets. The market breadth is looking strong. The Bank Nifty, which has really been the flag bearer of this rally that we've seen from the start of the year, I mean, that's just got more legs to run, and that index is outperforming the market as a whole. I think by and large, there being no aspects that have rocked the boat, Neeraj. Yeah. This being, in your words, a plain Jane budget, something that pretty much toes along the lines that the market was expecting, gives markets the relief that we can go forward from here. So, most of the market experts I'm talking to are saying, okay, now the budget is out of the way and this rally continues.
Yeah, so and I think we have a very special guest as well, but just that limited point, last budget, before the budget we were down and then we rallied. Yeah. This budget, we had a pre-budget rally and we're still rallying, which is actually a very good thing. That's true. But yeah, let's get in a corporate voice, and Dr. Pawan Goenka joins in. A lot was expected out of this budget as far as the auto sector goes, maybe the scrappage policy, maybe a few other things. Nothing has come about, but I don't think the markets or the sector per se would also be complaining. Dr. Goenka, thanks so much for joining in. Most people that we spoke to actually gave a thumbs up to the budget. It's remained as it's supposed to be, a statement of accounts, and no big bang positive or negative moves that have come in. What is your verdict as far as the space goes, as far as the economy goes?
I think more or less what you said summarizes what I feel and most people feel. Overall, a positive budget, nothing big bang, no sort of new major things. But that's okay. That's okay because we don't need to necessarily see major things. The thrust was on continuing what has already been put in place. So the focus on farming, agriculture, focus on poor, focus on rural, focus on youth, focus on governance, focus on digital India, focus on financial prudence, all of those things continue the same way that they have been in place. You see somewhat larger thrust perhaps this time on infrastructure, especially because regular budget has come into the central budget, so that does add up. You see a little bit more thrust perhaps on digital India, quite a bit thrust on digital transaction, and a very bold move perhaps on political donations, transparency in political donations. I think that goes well with general public. Markets are also very happy about what didn't happen because there were fears of axe falling on certain things like long-term gain. That didn't happen. There is no tinkering with excise duty, which also gives a confidence that perhaps GST will happen on July 1st, and that also is a positive sign for the markets. So there's a lot of that to cheer about. But I would also like to talk about a couple of things that perhaps we were expecting that didn't happen. One, I think the time was right to give overall reduction in corporate taxes. Though for MSME there was a huge reduction, but even for larger corporations, I think some reduction was expected, especially because some of the exemptions had been removed last year and the year before. So that was a bit of a disappointment that didn't happen. I would have looked for a little bit more in terms of investment incentive that I didn't see. And there's a lot that was talked about of how to make us a tax compliant nation. And that was a very good sort of prelude that the finance minister had done by giving all the numbers. But I didn't see enough in the budget that will create a fear for tax compliance or non-compliance. And that would have been really nice if we could do something to widen the tax network rather than taxing more from people who honestly pay their taxes.
Right. Oh, absolutely.
So that's a summary. I think 5.2% as the fiscal deficit was something very positive.
Yeah, no, absolutely, Dr. Goenka. I just, want to quickly touch upon your stock is up 4%. That's the case with the markets. The focus on pushing the rural economy has been made amply clear. But, just some aspects that may be a bit of an overhang to the consumption patterns in rural and semi-rural areas. Looking at cash transactions, putting a limit of about 3 lakhs there. Any transaction above 3 lakhs in cash is banned. Would that impact, consumption decisions in any way, especially for the markets that you address?
Well, the 3 lakh tax consumption does not have any negative impact on markets that we address because in most cases that's the down payment or the margin money is less than that, and therefore that should not be a problem. And slowly people are getting used to opening bank account, paying by check or digital transfer. So I don't think the 3 lakh limit on the cash payment is in any way negative on the demand for either automotive or tractor. And in the long run, that's the desirable thing to do. So that's fine. Clearly, the thrust on infrastructure, thrust on rural, and thrust on agriculture bodes well for demand, especially for tractors and also for automotive, because infrastructure always generates demand for automotive products, and therefore that's positive for both auto and tractor. I think the overall fear that might have been, and people are waiting to spend money, waiting for the budget before they start spending money, that fear probably is gone. And therefore, one would think that the demand would come back, even though budget is not doing anything specific to bring demand back, but the collateral effect, positive effect, and the fear not being there anymore will bring the demand back. And I would expect to see that February and March will be back to normal. November, December, January certainly have been dampened by demonetization, and I would think February, March will be back to normal. And by 1st April, we would have probably forgotten that there was something called demonetization, and then business will be as usual. I think one very positive thing about the budget, one was that we are fearing, was that with elections around the corner, there could be political politically motivated budget in terms of giving sops, which didn't happen, and I think that most people see as positive.
Yeah.
Of course. Great. Dr. Goenka, you've outlined almost everything that we would have wanted to know. Thank you so much for joining us today on this very special day and giving us your thoughts. Look forward to have you, of course, more often on the forum. The equity markets are celebrating this budget. Just before we get in our next market voice, that is Navneet Munot on the show, I think I need to take a question with Mukesh on what has he made of the tax bits that have come out. And, Mukesh, your verdict, I mean, we've spoken for the last couple of hours on all that has happened. There are a couple of other news bits that have also come in, including the provision to a sunset clause in respect of deduction allowed to certain persons as well. It's something that we haven't quite discussed on the show till now. So what have you made of that announcement and anything else that has stood out for you?
Well, I think this has got to do with the section called 80CCG, where you were getting a deduction if you made investment in certain specified shares or mutual funds.
Right.
This was an overall part of the 150,000 deduction that you got for individuals. Now, there are two changes that have been made to this. The first change is that this is no longer available for investments made after April 1, 2018. And for past investments, if you realize capital gains, then unless and until those capital gains are realized before March 31, 2019, you will not enjoy an exemption. But to the extent you've taken a deduction in the past for investments made, that would be available. My view on the overall tax rate changes has been positive, though I would have expected that there is some reduction that was announced for corporate tax for all corporate taxpayers. I mean, there are certain things which are misses over here. For example, there is no change in the tax rate for partnership firms. So limited liability partnerships will continue to be taxed at the normal rate. And small corporates, with turnover or less than 50 crores will enjoy the 25%. So there is some level of incongruence, tax rate structure that we might as well land into. In addition, I think that whatever the finance minister has given away to the taxpayer, he's taken it by way of higher surcharge.
So which is also a thing. And I'm sure we'll revisit this, Mukesh, and just stay on because there's so much more to talk about. But I need to focus on the equity markets, the last 45 minutes of trade. So allow me to do that. 1.5% up. Navneet Munot in our studios. And Navneet, there's a big celebration out in the markets right now. And we'll discuss the broader macro points as well. But I want to discuss some of the micro points. Firstly, I think NBFCs and real estate as a basket are moving up. And this budget seems to be a lot about real estate, affordable housing push being given in terms of the rate deduction being given on borrowings and otherwise. What do you make of all of this for real estate in particular?
So of course some of these stocks got beaten down after the demonetization and fears of the slowdown in the sector, and also from the recovery side for the NBFCs that you talked about. But I think things seems to be improving. I think with the liquidity coming back into the system, I think a lot of things are coming back to normal. With increased focus on affordable housing and the rural sector, I think several of these guys will benefit. And from overall digitalization of finance, I think the entire financial sector is a big beneficiary if the government continues on the path of digitalizing the finance, because that also leads to financialization of savings, and a lot of lending or borrowing that happens in the informal sector comes back to the formal sector.
No, so are you saying post this budget one needs to look at real estate stocks which have been at multi-year lows in new light? I mean, as a fund manager, if you're underweight real estate, are you going to change your stance?
There are very few stocks where the balance sheets are in a good condition. And last few years, I think some of those have got beaten up quite badly. But I think structurally over a longer period, I think affordable housing is one segment. And it's not only about the builders, but I think several other companies are likely to benefit from the big push to the affordable housing. I see a big future for affordable housing. There is huge demand, the increased credit availability with the tax benefits. I think that segment could be quite big over a period of time.
Are you going to be looking at PSUs, Neeraj? Are you going to be looking at PSUs in the wake of what the government has said, whether it's a new instrument in a new CPSE ETF hitting the markets? They're talking about an integrated oil major coming to the fore. There being new listings from the space. Is that a space where value unlocking will be seen over the course of the next 12 months? If there's one sector to watch out for post this budget, it's public sector undertakings.
I think overall everybody benefits from the various budget measures, but particularly the overall if the governance improves, because that's one of the reasons for the rating that the PSUs in general get. And I think as the governance improves in India with the overall, I think with the more administrative reforms coming in, and I think government's increased focus on getting several of the other entities which could be quite big. For example, IRCTC could be one of the large digital play in India.
Right.
I think several of those could be beneficiary for, particularly in the PSU banks. I think one or two larger names which have invested heavily into the digital technology can take the benefit from the leverage post the demonetization.
You know, I want to mark some of the banking names, by the way. IndusInd Bank is now rolling on at new life highs for itself, 1313. ICICI Bank didn't have a particularly great quarter. That stock is up about 4.5%, accompanied by rate sensitives all through and through. Autos, M&M, Maruti, Tata Motors, all of these stocks. Eicher Motors, the numbers came out, nothing too special again, but rolling on at good impressive clip as well. Private banks, Navneet, they have rebounded after those 1.5 months of iffy moves. Is there more in store? It's a leadership sector. You need banks to perform for the index to move up higher. Do private banks provide the leadership for the indices to take out the new highs that we are waiting for?
I think the overall domestic cyclicals, which includes financials, maybe some parts of industrials, some part of consumer names, and the government is trying to put more money in the hands of consumers, a lot of money going into the rural economy, to the farmers. I think that will all benefit overall, I think, the domestic cyclicals. And I think that's one play one needs to look at.
Okay. Navneet, I'm sure. Okay. Just one quick 30-second verdict. Anything else that you wanted to speak about? I have 30 seconds.
I think one of the most interesting things, if you look at the Trump world and the Western world where it is going, they're talking about the border adjustment tax and anti-immigration, anti-trade. And today in India, FIPB has got abolished. We are talking about more liberalization in FDI. The government is talking about cutting the withholding tax. I think we are going in a completely different, more liberalized world where the rest of the world is becoming more protectionist. I think that's something that all Indians should cheer. And I think on the focus on digital economy, I think India may leapfrog, just like from the landline, instead of landline, we move to the digital in the mobile space. I think same thing can impact a lot of other sectors of the economy when we become more digital.
All right, that's actually a great closing comment. Thanks very much, Navneet, for joining us today and giving us your perspective. Nikunj, take it away. That's word coming in from the CIO of SBI Mutual Fund saying, the world is getting protectionist, but we are liberalizing. We are calling the world to make more investments in India.
Tanvir, frankly, I still feel that today's market action has a lot to do with short covering and a lot to do with relief rally. I don't think anyone is in a position to come and say, okay, these are 5 companies where EPS will go up by 5%, these are 5 companies where EPS will go down by 10%. That's an fine print analysis, does not happen. Now that the event risk is behind us, markets are breathing a sigh of relief. Short sellers are getting completely cleaned out because the opinion was that we've seen a pre-budget rally, we will see a post-budget sell-off. That, I think, is the biggest variable factor for me. But you can't lose sight of what's going on with the Nifty right now. You can't lose sight of this lovely green wall which is behind me. We are trading at 8,700. What? 8,700? Yes. In terms of a number, we are now less than about 400 points away from an all-time high. If I would have made a case that we would go to all-time high, let's say in the month of November, December, that would have been a laughable comment. But that's the power of market for you. It goes higher and it goes higher. Good to have you. Thank you for joining us. For the first time, I must say that I have to look up. All of us have to look up because the wall is so lovely and green. Pick up the strongest stock for me here.
So, Nikunj,
as
we discussed yesterday that banking is looking good, and irrespective of what outcome was in the budget, we were quite confident that banking would do well because there was nothing negative which would come out for banking.
So let's
and if you look at ICICI Bank,
ICICI Bank 4%,
exactly,
SBI up 3%, Axis Bank is yet to pick up. So between ICICI Bank and State Bank of India, where would you press the button?
I think I'll press both the buy buttons for the same. In fact, we have given those trades about buying ICICI Bank when it was, hovering around 250 levels or so, Nikunj. And SBI recently, around 260, 265 was a good buy. So I believe even from current levels, ICICI Bank has good scope to move towards 295, and I think more or less similar levels for SBI. And these two bellwethers would be responsible for taking Bank Nifty higher.
Okay, let's actually look at the intraday graph of ICICI Bank and the intraday graph of State Bank of India. Now, folks, bear in mind, ICICI Bank and State Bank of India, corporate banks. They do well when you're feeling confident of a revival in corporate profitability. They do well when you're feeling that the corporates are going to be borrowing more and the scope and the size of the economy would move. So this Aam Aadmi feeling, the common man budget, I think that kind of an association is now coming with budget because auto companies, wholesale banks, corporate banks, down the pyramid names like SKS Microfinance, some of them are rallying very, very strongly. So 268 for State Bank of India, 280 rupees for ICICI Bank. What could be the immediate target for SBI?
So I'm expecting SBI, it has just given a breakout above this 265 odd levels, Nikunj. I'm expecting it to run up probably towards 290, 295 odd levels, and that's my target price for SBI.
290 for SBI, ICICI Bank. Can it go to 300?
More or less, yes, it is quite possible that it can go and touch, it would have some resistance around 295, 300, but I think right now we should not discuss about resistance. I think there are a lot of, now, we were discussing few days back, a left out feeling is there or not there in market. And that feeling is going to come now, and especially in banking space. And I think these two names are going to give a lot of retailers and HNI clients that they have missed out on the rally, and especially banking rally.
Fire in ITC, always the typical name which reacts rather valiantly on the budget day. First there was sigh of relief, then nothing for ITC, then the fine print comes out that, oh, cigarette excise duty tinkering is going to be there. ITC has this crazy habit of giving good traders a very smart move provided you get the trend right. And there you go, ITC 267. Can it go to 275?
If you look at all three stocks, they are more or less at same price, 265, 280, and all these three names we have been actively suggesting, Nikunj. In fact, again, like SBI, even ITC has given a breakout about this 262, 263 marks. And with GST around the corner, anyways, I don't think so anybody was expecting any huge, tax burden on the ITC. I think it can easily move towards, again, those levels which I was mentioning for SBI. I think 290, 295 is pretty much easily.
There are two more intraday graphs which I want to see. One is the Bank Nifty and second is the IT index. Now, folks, this is the interesting part. IT pharma are not contributing and yet markets are moving up. Yes, IT and pharma are two large sectors which are not contributing. They are dragging the market down. So there you go. The IT index has recovered from the day's low. The day's low was like a scary level. It is up, it is still down by 1.3%. But the Bank Nifty is where the real magic is happening. 238 rupees for the Bank Nifty.
So that's a morning trade, if you recall, Nikunj, that buy Bank Nifty, sell CNX IT.
Still on?
Yeah, this trade I think is still on, but this is for positional traders, not for people who are looking for 1 or 2 days gain. I think the kind of build-up which you are seeing, Nikunj, in Infosys, Wipro, not so much in TCS, but these two names have been, adding a lot of short positions, and I think CNX IT would still be under pressure. So I think losses would, increase in CNX IT, and we just discussed how SBI and other stocks, ICICI Bank, would contribute towards gain of Bank Nifty. So that pair trade is still on for us.
Okay, now Neeraj Tanvi, this is the interesting bit according to me. It's a very inward-looking market today. Markets are not realizing that there is a challenge when it comes to the global situation. Broadly 30-35%, 40% of your Nifty numbers are still global in nature. So markets are focusing on the good part, they're ignoring the bad part, but that's what markets are all about. Sometimes they climb the wall of worry, sometimes there is a bit of, sometimes there is a bit of an ignorance to good news. So in a bull market, when there is bad news, markets make an excuse. When there is good news, markets capitalize on that, and that is markets for you.
Why question the levels, Nikunj? Go with the flow. 8,700 is here, and I think everybody is celebrating. And
find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.